This is now the second week that came to an end in our portfolio simulation for vanilla equity. And as you remember, we have three portfolios. One is where we just buy and hold. The other one is where we let the profits run. And then the third one is where we're buying the dip. And these are portfolio simulations. If you're not familiar with vanilla equity, you can go to vanillaequity.com and find out what we're really doing. But what we've done so far is we invested 10,000 in each portfolio per week, and we still got a couple of weeks to go to be fully invested. And our buy and hold portfolio has really benefited from doing this dollar cost averaging, where we're not investing the full amount at once. And this is something you will have every time you go to a private bank or anyone advising you of investing capital. They will always tell you not to invest your full amount immediately, and it has really paid off here. None of the stocks in portfolios have gone up. So for the buy and hold, that means that the average purchase price is going down, and for our let your profits run type of portfolio, where we're just basically selling everything that's not making a profit on a weekly basis, they're actually we're still not investing. So we invested the first 10,000, the initial investment round, and then the second week, so a week ago, nothing had gone up, so we sort of sold, and then we bought it again, and now the same thing happened. So that portfolio, we still have only invested 10,000, which is pretty good. It's the best performing portfolio in our three cases. And the last one, where we're buying the dip, we're buying 50% of the stocks that have gone down on a weekly basis. So there we're almost fully invested because everything has gone down. So we're looking at it from a perspective where we have a chance to make a profit, buy something cheap. And it's going to get really interesting to see development now. The direction of the markets is very, very clear, and it's very much negative sentiment all over the board, and you can't find a person that thinks that the market is going to go up. It's really a strange situation, but we're going to follow up anyway on a weekly basis, and let's see how it goes. I think here you can really see how much you need to be actively managing your portfolio. If you just let your portfolios go like these three simulations, you can't really expect a big return, especially we're not going short. The only portfolio here that's sort of smart is the one where you're letting your profits run, and you just basically don't invest in a time like this. And that's not really a bad case. We have the dollar very strong, so actually holding dollars right now might be a good idea, and then you can invest in euro-nominated real estate or euro-nominated securities later on, maybe. Anyway, that's it for me. I'm Eric Snell. Get to know Vanilla Equity by going to vanillaequity.com, or just follow us on social media. Okay, I'll see you next week again.